What is going on, guys and gals? It's Billy from Storm Trades with another trade recap. We're going to run through the CL short trade that I took Tuesday, July 22nd for a nice little 1.5-hour win during the New York AM trading session. On this trade, we had time frame alignment and a clear bearish daily bias with a clear draw on liquidity. Doesn't get any better than that. Let's get right after it. Starting off on the daily chart, we have the last 4 days represented here. I'm going to set up the chart the same way every single day. Start off with setting up, marking off the previous daily low, previous daily high, and I'm going to mark out a fib based on the previous daily candle. Okay, we'll come back to why that is important and how it's relevant to this analysis in a second. Now, price books from internal to external and external to internal. So I want to see if price is most recently swept or is delivering from any sort of external or internal range liquidity. That, of course, would give me an understanding of where price is likely to head next. Now, we did come up here and sweep, okay, into this daily bearish fair value gap. That is internal range liquidity, okay? And whenever we enter and deliver from internal range liquidity, I'm going to be trying to find some external range liquidity to reach for. Doesn't have to reach for it that day. It just has to make sense in the grand scheme of things. So we do actually have, oh, and I do want to mark out here that we had a liquidity rate, right? So if you are familiar with T trades at all, he talks about the C2 sweep, right? And if we get a C2, which is just this second candle here, into a bearish POI, we could expect a swing point to form here and for price to move lower and to seek liquidity in the opposite direction. Now, we had a strong close after that sweep, right? So we had a close, expect a continuation here lower. We have a daily swing point down below to reach for. Again, like I said, I don't expect that to happen this day. Just needs to make sense that we're delivering from internal and could be expected eventually to take the external range liquidity. I am expecting lower prices. To me, this chart looks very bearish. So I'm moving on to the hourly time frame. Let me pull up the hourly chart. The hourly chart is always telling us a story. Okay, sometimes the story is easier to read than others. It's pretty clear that when we swept this liquidity up into the bearish daily fair value gap, we have created a smart money reversal, and this happened on Friday. Ever since we did that, price has been heading lower. There's been lower lows and lower highs. Okay, so I'm going to mark out this change in the state of delivery. Yes, it happened last week, but it is relevant. When we have a smart money reversal, that is effectively the start of, in this case, of a market maker sell model. Now, we confirm that this has been a change in state of delivery because we left a large imbalance here, right? So that tells us we had displacement, strong displacement. We never even came back up here to test this bearish hourly fair value gap. And these are all signatures in price that help us understand which side of the market we are in fact on. Now, when we have a clear swing high and a clear swing low, I want to run a fib just to sort of see if any of the common levels that we look to trade, where they line up with any forms of draws on liquidity. Now, it makes sense that we went in here into the -1, -1.5. That is our low-hanging fruit. Then we've consolidated, a little bit of a retracement and moving down lower. We like to see price target the -2 to -2.5 and eventually the -4 to -4.5. Just running a fib just sort of helps understand how much room you have to go until reaching key levels. Now, another thing that I like to do, and you'll see me do this on almost every single trade, is I want to pull the ADR levels, and I'm looking specifically at the 1/3 ADR. Now, I love to target the 1/3 ADR as a draw on liquidity, and this 1/3 ADR has not been swept yet, and it is relatively close to the -2 standard deviation, right? Now, when we are in a bearish move on the hourly market structure time frame, we want to see up close candles close back down below strongly, indicating order blocks and PD arrays being respected. Okay, so we do have that right there. Now, we want to line up clear draws on liquidity, and we have that in the form of, and it's a very strong form of liquidity, which is relatively equal lows, right? So we have a low here, and just a higher low there. It's a failure swing. We have relatively equal lows right at the 1/3 ADR. So I am immediately drawn to that, and I'm trying to find a trade to trade into that. Now, in order for me, so let me just go ahead and mark this off. This is something I'm looking for price to draw to, right? Now, I'm trying to consider, right, before going to the M5 time frame, which is my execution time frame, I want to consider if we've just recently swept some sort of hourly liquidity, or if we're delivering out of some sort of hourly POI, right? So basically that's the same thing, but I'm looking for fair value gaps and swing highs. Okay. Now, actually, I just noted here that this is we supported. So we had up close candles, and then we closed back down, and again we did that with displacement. So I just wanted to make note of that. I don't trade order blocks on the hourly. It just helps me understand the price in this case is going lower. Now, it's just something to make note of. We had this smart money reversal, and if you look at the chart in this way, right, with this swing low here, we really have the sell side of the curve and the buy side of the curve clearly marked out here, right? It's easy to see that we did have a change in state of delivery here on Friday, and that we've been moving lower, and it makes sense that we target ultimately this swing low, because that is, of course, the higher time frame external range liquidity. But I don't need to go there for a great trade, right? We're on the hourly chart. So just look at this right here. I am just going to try and take a trade, if I can, down to the 1/3 ADR and to sweep this relatively equal low right here. So we have a liquidity rate, right? So I'm going to take a look. Always want to know what price is currently doing. Are we currently sweeping any liquidity? Are we currently delivering from any sort of liquidity? Well, we took some liquidity here, and when we did that, we are currently delivering from hourly bearish fair value gap. That's all I need to get ready to go down to the M5 time frame and start looking for bearish setups. So let's do that right now. All right, now on the execution time frame, I am looking for a sweep of liquidity. In this case, a sweep of the London high into a bearish, in this case, a bearish hourly fair value gap. Okay, that's my hourly POI. And now I'm looking for the change in the state of delivery, right? How do I find that? I'm looking for the candle or series of up close candles, in this case, because we're looking for bearish move, that took the liquidity. And I want in this case, look at this. This is a V-shaped move back below this series of up close candles, right? So right there, this is the change in the state of delivery that I'm looking for. Now, I do have just a demonstration of how bearish price actually is. We have two M5 fair value guys here that have not even been traded back into, so we are extremely bearish. In this case, I want to get on sides with a short target down here, the 1/3 ADR. Okay, that's what I'm looking to do. The low-hanging fruit for me, of course, is to target this London low. Okay, I'm going to mark that out. So London low, this is where I took off a portion of my trade. 1/3 ADR is where I took off the next portion, and then I moved my stop to break even and got stopped out break even. So I made 1.5 R on the trade. Now here's my entry right here. I'm going to go ahead and sell here on market sell, and then I put a stop. I put a stop up here just above the midpoint of the second fair value gap. I figured my invalidation would be if we came up and inverse this lower M5 fair value gap, that we may possibly could come up into the lower part of this this higher M5 fair value gap. But realistically, if we had come up here, I would have gotten out of the trade, because it would have indicated that we might be getting a larger retracement. Now I'm going to put a stop down here at the 1/3 ADR. All right. And I'm going to move the price forward. and we got a nice delivery right there. Hope you guys got something out of this trade. It was a nice trade for the morning. I'll just show you right here. Here was the execution. Okay. So, yep. And if you guys got anything else out of this at all, I really appreciate it. Like and subscribe. I'm getting a lot out of doing these videos, just sort of understanding price, doing trade reviews as well on pairs that I don't currently trade, but I'm looking to add to my trading list. Anyway, I appreciate anybody who watches this video. You guys have a great day, and happy trading.